Big news is unfolding every single day, and I'm here to bring it to you. The first thing I want to look at is the economic lows. We are seeing how much people are paying for things and actually getting less in return. The second thing I want to look at is the insider sales. Insiders are selling right now. I want to show you exactly who, what, and why. Okay. And the third thing I want to cover is China's real estate. China's real estate is important, not just to China, but to the rest of the world. And we'll talk about exactly why that is the case. So much to cover. Let's go. I know you've been paying more at the pump. Right here, you could see the price of crude oil going up, and that is $74 a barrel for WTI. We've even seen people from the UK talking about not only the price increases, but at the same time, they have really received the shortages, the fuel rationing and so on in a very limited case. But we hadn't heard about that in many countries for years and years and years. And yet here it is today. And look at this. I mean, it all connected, right? Costco, Nike, FedEx are warning that there's more inflation set to hit consumers as the holidays approach. You've got the supply chain problems. You've got the shortages. You've got the ships sitting offshore. All of these things are converging right here. And all of these companies, basically every single one, has said, we've got problems. We've got issues with the input costs. We are raising prices, whether that's Procter & Gamble, whether that's these companies here. Every single one seems to have the same message. A slew of factors, including rising shipping costs, supply chain bottlenecks, are persisting and should last through the upcoming holiday season. Then we have this. What happens without the turbocharge? This is the contribution of Chinese growth to the world's GDP. And right now, believe it or not, this is over a third. So this is so key. It's so important. I will discuss China later on in the episode, but I wanted to break this down really quickly to you to sort of foreshadow what we're going to talk about. And it is important to understand how looking out into other countries, other parts of the world, and start to see pieces and details and connect all the dots, it makes a lot of sense. You have to understand with the China credit impulse you're seeing right now. Back in April, I warned about it and how once this went negative, it would impact the economy, not the stock market, the economy around the world. And in fact, that's what's happening today. There's a slowdown going on. And in basically every video, I show you this. But if you look at the stock market, not the case. All right, now looking at this, this is Michael Burry. He posted this on his Twitter and obviously deleted it quite quickly. But you're seeing the SEC actually subpoenaed him. A subpoena has been issued to Cyan Asset Management in the above referenced investigation, and that is in the matter of GameStop. So many people have been talking about this. I mean, there's so much that they could be looking at, and perhaps are, but you're subpoenaing Michael Burry? I mean, this is just nonsense. You know that they are just wasting time. This is the way it goes. Let me know what your thoughts are on Michael Burry. What do you think is happening today? Not previously. I'm talking about right now, 2021. Michael Burry, what do you think? Post it in the comments below. Now, take a look at this. Insider selling. Which big tech CEO has sold the most stock? And, I don't think it necessarily matters who's selling the most, but we'll talk about that in a second here. I think it just shows you, because these people have a greater insight probably than anybody in the company, and so they would know what's happening. So you see right here, they all sell. And why do they sell? Because this is part of their compensation. Their salaries might actually not be very good, but they get the stock, and that's really what they want. So you're seeing the very first one. By the way, this is first half of 2021. This is Tim Cook. Nothing, right? Well, actually in August, he sold, as I showed you in a previous video, $350 million worth of stock. He received compensation of the $350 million, and the next day he took that cash. And that just shows you something. Shows you that perhaps they don't want to have their net worth entirely in these particular stocks. We'll talk more about that in a second. So you're looking at Google and Microsoft, not as much compared to their net worth, $62 and $65 million. Jeff Bezos, on the other hand, $6.6 billion worth. Do you think he put that in his savings account? I'm not sure. We'll see. We'll see what happens there. And then, of course, at the end of the list, we have Mark Zuckerberg, everybody's favorite. And apparently, 98% of his wealth is in Facebook stock. So a lot of people don't realize this. They see the billionaire list and they see he's worth 100 billion, 200 billion, 10 billion, 4 zillion, whatever it is. These rich people, these wealthy people, they don't understand the composition of that wealth. If Facebook went bankrupt tomorrow, he doesn't have quite the that wealth. But that shows you why a lot of these insiders sometimes are quick to sell, because they want their money maybe in real estate, maybe in other businesses, maybe they're putting it in land. You see that happening. This happens all the time where they get an opportunity, but they don't want to spook the market as well. Look, if you appreciate the depth that I go into to give you all of this, by the way, if you want to know how to look up any insider, you can do so. There's a video that I have in my e-course, which is in the playlists here on my channel. You can check that out. It breaks down exactly how to do that. If you appreciate all of this stuff, hit that thumbs up button. It's easy to support the channel. Thank you very much. Looking at this, we're going to talk about the stock market, okay? First, outflow. I said outflow, not inflow, for global equities in 2021. Can you believe it? Out of this whole year so far, this is the first outflow. And then we have first outflow from tech funds since June of 2021. Yes, it's possible for there actually to be some outflows, and the second biggest outflow ever from infrastructure funds. Why? Oh yeah, that infrastructure bill is not going to get passed. Like anybody believes that. But regardless, this information coming from the EPFR. Do not trust what people say, the news articles and this and that. You've got to get it from as close to the source as possible. And then, plain and simple, equity flows up greater than 90% versus the all-country world index, up 12% in 2021. All we're saying here is that the more money that's coming in, it's finding its way into the stock market, perfectly correlated. That's obvious. More money coming in, it's got to end up right here. And in general, it's going there. But if you break it down, you start to see that more money has been going into, let's say, tech stocks, then it's been going to emerging markets, and you can kind of get a bit more granular with it. But regardless, you see this just showing you how much money has been invested right now at this time. I want to break it down a little bit in the Money GPS Insights. Let's take a look. Trillions are pouring into the stock market right now, but not all stocks. We see that some of the names are definitely getting more love than others. With inflation on the rise, investors have shifted their portfolios to perhaps take advantage of this. China's heavy reliance on real estate could actually impact the rest of the world. We'll talk about this more in a few minutes, but understand that this is all definitely correlated. Here we have Evergrande stock. You can see it had been moving down and down and down, and then it popped up when I guess the market thought this was the time to put money into it because it's rescued, but that's not the case, at least not yet. And the stock began to slide even further. Looking at this, PBOC's announcement about the ban on crypto, you may have heard of that, got widespread today. It was announced on September 15th, but got posted online today. The market already reacted to those regulatory FUD. That's what they're saying here. So obviously, I can't read that, but essentially what we're seeing here is that there's apparently no reason to be worried. I think a lot of people are kind of tired of China banning cryptocurrencies, but I think this is probably a step above what they've done before. But ultimately, as they say here, don't fall for the FUD again. That's what they say. We'll see what happens in the near future, but clearly they're going for more restrictions. They're closing down in many aspects. Credit Suisse dumped Evergrande exposure last year on risk fears. Can you believe it? Credit Suisse, who's got themselves into every mess possible, Archegos and so much more, they actually got out of this one. I'm surprised. Bank staff raised circular financing concerns about proposed loan to property group's chair. So they saw something they didn't like and they got out. That's how you should be as well with your investments. China's Evergrande auditor gave clean bill of health despite their debt. PwC, PricewaterhouseCoopers, didn't include a going concern warning in its annual report for the ailing property developer. No worries. Just a little money on the side, I'm sure, happens all the time. What about what was going on with AIG? What about all these other companies during the financial crisis? The ratings agencies, do we need to go there? Look, let's be honest, these companies, they've got friends in high places and they make things happen. China's overseas Evergrande accounts to ensure housing gets built. China oversees, look, this is what they want to do. They want to make sure that the housing stays up and running. So perhaps this is, in a sense, the first step to nationalizing this company. You better build those houses. Don't stop. Why? Because it's so essential that China continues to build homes. I don't know if I have it right here, but it's something like 20% of the GDP in China. 20%. So if they stop building homes, that economy is coming down. It's coming down, down, down. Okay, so they have to continue to build, even if that means building empty cities. Evergrande bondholders left in the dark as crucial deadline passes. Indebted Chinese property developer faces imminent default on $84 million of offshore. So the offshore, they might say, we're not going to pay, or they're going to delay it as long as they possibly can. But at least the properties themselves, they're being built. At least that's what they say. Properties everywhere in China. You could see Goldman Sachs posting this information if you are interested. You could take a look. There's a lot to cover there. I will leave the links, as always, in the description under the sources below. There's more in here. Just looking at this one particular on the middle, if I highlight it, actually would help you out. The Chinese property market is probably the largest asset class globally. The largest, think about that. Residential property, fixed income, and equity. It's bigger potentially than US equities. Now, that just gives you an idea of how massive this is and why they can't screw it up, why they can't stop. Okay? There's a lot of data and detail in these, okay? I would highly recommend checking it out. And there's just more in here. So all of this together, what do we have? We have big concerns. They're being taken care of. That's what they say. But whatever you do, look at your portfolio and just understand, well, the Fed's going to print money, so everything's going to be okay. We have to be careful and cautious where the money is going and understand that we've got inflation here lighting a fire up under the behinds of these investors, the big investors. So they are addressing these concerns and they are really adjusting their portfolios. They're not selling, they're not putting it under the mattress, but they are adjusting accordingly. That's my message. That's all. If you want to become an insider, it's the place where I'm giving out all this information. I'm going to be able to give you the PDFs soon. There's one PDF already, but there's so many more coming. So you've got to join the insiders right here. And if you want, you can just check out themoneygps.com. If you want to support the channel, again, hit that like button. I do appreciate it. And if you haven't seen this video yet, you definitely want to check it out. Click it and I'll see you there.